Hello YouTube, welcome to part 2 of pricing. If you skipped part 1, I suggest you go back to part 1 because that's where we started this question. Anyway, in part 1 we had managed to solve, or we had managed to get our price function as price is equal to 80 minus 3 over 100 x. Alright, so we now want to answer the question in part 2. Number 2 here, 2a says, what is the profit maximizing output and price? All right, so what's important here to know is this: profit is maximized. So this is now from economics. Just going to write this down. Profit is maximized when your marginal revenue marginal revenue is equals to marginal cost. So what means, just means MR is equals to MC. So what I'm going to do now is I'm going to get my MR and I'm going to get my MC and then solve for X here. That will be my profit maximizing output, and also I'll be able to get my price. So to get MR, I'm going to I'm going to get my total revenue. So this is what I'm going to do now. So total revenue, TR, is equals to my price. So total revenue is always equals to price, multiply that by quantity. All right, so in this case, my price, I know that my price is this function 80 minus 3 over 100 x. And what is my quantity? My quantity is x, or my demand. That means my total revenue is going to be 80x minus 3 over 100 x squared. I've just removed the brackets there. Then to get my marginal revenue now, so therefore marginal revenue, I'm just going to differentiate my total revenue. So it's equals to DTR. Just going to differentiate total revenue. This is going to give me 80. So I'm not going to go into differentiation. If you've never done it, I suggest you look for a textbook that might teach you how to differentiate. But what I'm doing here is differentiation. So I'm going to be left with 80, because this x disappears. And here I'll be left with 3 over 50 x. This will be my marginal revenue. So I now know my marginal revenue, which is this one. I'm just going to highlight it again. This is my marginal revenue. All right. So what about my marginal cost? Marginal cost is just equal to your variable cost. If I wanted, I would have done my total cost first and then differentiate it again to get marginal cost. But in this case, it's simple. I'm just going to say marginal cost is equal to my variable cost. So from my question above, our variable costs are given. So I'm just going to go back to the question. My variable costs are these ones that I highlighted in pink earlier in part 1 if you missed part 1 of the video. So these are my variable costs. There's 3. So it will be 10 plus 6 plus 4, which gives us 20. So I'm going to come and write down here as marginal cost is equals to 20. Then I'm now going to solve my equation. So let me write this in a different color. So therefore, MR should be equal to MC for me to maximize profits. I know my MR. My MR is 80 minus 3 over 50 x should be equal to my MC. MC is equal to 20. So if I solve this, I'll end up with 60 is equals to 3 over 50 x. So It means x is equals to, let me just put this in my calculator, so it will be 60 divided by my calculator is not working, I don't know why, but let me try again. So 60, yes, not working. 60 divided by 3. Yes, so x becomes 1000. So what this means is, it means that what it means is x is equals to 1000. That means my profit maximizing output is equals to 1000 units. So if this company sells 1000 units, it will maximize its profits. So I've answered a part of the question, but the other part of the question here wants me to calculate output, which is 1000. What about the price? So I'm going to calculate the price now. The price, I'm going to use my price function, which is this one here. This is my price function. So P is equals to 80 minus 3 over 100x. This is what I'm going to use. So price is equals to 80 minus 3 over 100x. But I now know my x. My x is this 1000 units. So if I substitute 1000 in this equation, in this price function, it will be 3 over 100 times 1000. That will be 50. So this becomes my profit maximizing price. Profit maximizing price. Then number 2b, the question wants us to calculate revenue maximizing output and price. So from my economics, I know that revenue is maximized. So revenue is maximized when your marginal revenue is MR is equals to 0. So I know my marginal revenue. Marginal revenue is one that I just calculated here. It's 80. So this one, 80 minus 3 over 50x. That's my marginal revenue. So I'm going to say 80 minus 3 over 50x. If I equate this to 0, I should get my output that will maximize revenue. So if I solve this, it will be equals to, so x will be equal to, put this in my calculator, so it will be 80 divided by 3 divided by 50, which would be 1333 units. I'm just going to round off to the nearest unit. Alright, so these are my units. So we have revenue maximizing units, 1333. So to get my price, I'm going to do the same as what I did here. So I'll come down and say revenue maximizing price. Revenue maximizing price. So I'm just going to use the price function. The price function, which is price, is equals to 80 minus 3 over 100x. I now know x, so I'm just going to substitute 80 minus 3 over 100 times. So this will give me a price of